Good morning and welcome to the ADS Securities Markets Update. The Federal Reserve finally decided not to raise rates in June's meeting after a long argument and promises to raise rates in June since the end of QE back in October of last year until this day. The Federal Reserve also revised its 2015 GDP outlook to the downside, kept the inflation estimates on hold or unchanged, and also surprisingly, they raised the unemployment rate estimates to a range of 5.2 to 5.3% instead of the previous estimates between 5 and 5.2%. Moreover, Janet Yellen showed a dovish tone in her press conference yesterday, saying that the market should not get too much attention to the first Fed fund rate hike and that the Federal Reserve has no decision so far about the timing of the first rate hike. As we noted in our previous report yesterday, the US dollar faced a wild run across the board right after the decision, and during Janet Yellen's press conference again, the euro spiked above 113.50, K below sterling also advanced as well above 158.50, the Japanese yen drifted below 123, gold added also 1% or more than 1%, rising to as high as 11.87 so far. In the meantime, we can't rule out September's rate hike. The upcoming economic releases will be the key again. Therefore, we will be waiting for further details and further evidences before putting our new estimates. But for now, we will stay neutral. As for the Asian session, there was disturbing news for the Kiwi and for the Reserve Bank of New Zealand. The Q1 GDP slowed down significantly today, growing by 0.2% only, while the estimates were to grow by at least of 0.6%. Moreover, Q4 GDP of last year has been revised lower to 0.7 instead of 0.8%. The year-over-year GDP also slowed down significantly again toward 2.6%, down from 3.5%, while it had been anticipated to slow down slightly toward 3.1% only. And this has led to a notable decline in Kiwi across the board, losing almost all of the Federal Reserve decision gains as the estimates right now are rising for a rate cut by the Reserve Bank of New Zealand in the next couple of months. As for the European session ahead, there are a few economic releases and events which may have a notable impact on the market, but first of all, we will be waiting for the European equities reaction to the Federal Reserve decision. In Switzerland, we will be watching the Swiss National Bank decision today, including the LIBOR rate, the also monetary policy assessment, and the press conference. And in this meeting, the policy is likely to remain on hold while we will be focusing on the press conference, whether if there will be any hints for further measures ahead. Going forward into the UK today, the retail sales figures will be released, and the estimates are to show no growth in May after rising by 1.2% in April. This is for the month-over-month, while the core retail sales may decline by 0.1% compared to a rise of 1.2% last month or during the same period. The Eurogroup meetings today will be held across the day with no hopes of a deal with Greece so far, and this keeps also the weight on the euro and the European equities despite the Federal Reserve decision not to tighten the policy or not to tighten the monetary policy in June's meeting. Going forward to the US session today, another series of economic figures will be released today, including the CPI, core CPI, which is the inflation figures. We have the jobless claims, the current account deficit, and finally the Philadelphia Fed Manufacturing Index, which should be watched very closely. These figures are the key for today's trends. Any disappointment likely to weaken the idea of a rate hike in September by the Federal Reserve, especially if inflation is slowed down. Stay tuned on our social media sites, Facebook and YouTube, to get the latest reports, the economic releases and analysis. Also, Ramadan Kareem, and thank you for watching. I'll see you once again tomorrow.